Good morning, good day, everybody. Thanks for joining us on our live stream. We're really excited to be here talking about some really practical help that we can give exporters. So my name is Susanna Hardy. I'm Chief Content Officer at IBT Online. Delighted to be here today. We're going to talk about the online world a little bit, but really also about some of the big concerns exporters have. Whether it's sort of how to reach the new market with my online tools, my social media, what kind of websites do I need, or else some of the big concerns about regulation. And including regulation, that's where we thought Amit would be a great assistance here for us. So I'm really delighted that Amit is joining us today. Amit Mathur is a co-founder and senior partner for a company called Quantitax. And they are a U.S. company, and they specialize in helping exporters optimize their tax. But I'm going to let Amit talk about that a bit better because it's not, versus the online. I'm going to do the online part, and Amit's going to talk about the tax side. So Amit, over to you. You tell a bit better about what we're looking at today for you.
Hey, I appreciate you having us. Yes, Quantitax is a firm we're a boutique U.S.-based firm. Our leadership team is comprised of folks who were partner, senior manager level folks at PricewaterhouseCoopers in a very specific practice, which dealt with maximizing often overlooked or underutilized export incentives for privately held U.S. companies whose products are used outside the U.S. and certain services are used outside the U.S. So what sets us apart isn't really our pedigree in terms of working at the Big Four, but it's that we were part of a national team that did nothing but maximize these incentives. And so we have the technology and expertise to do that. And again, it's for privately held U.S. companies that have products or services that are used abroad. And notice that I'm intentionally, Susanna, avoiding what we sometimes refer to as the E word, which is export, because we don't want people to limit what they're thinking of that they get this tax incentive for to just exports, which I'm sure we'll get into a little bit. And whenever we do these things, we often do CPEs. We offer for accountants, and there's always questions related to that. So I'm looking forward to some good ones from the audience today, hopefully.
Great. Okay. Just also sort of a little bit about our background and where we see that. And IBT Online, also a U.S. company. We've been around for quite a long time, but we really only focus on the online side. So that means building websites and online marketing for our companies who want to grow their business and their exports, their sales, their brand, all of that. And we are known for our international side. So I get where you're coming from with regards the export E word, but certainly the international aspect of it is very similar to what we're looking at. As I mentioned, right. A lot of our companies also are looking at online regulation. So I'm really interested to hear as well about tax regulation and how, because what you're talking about there, those IC-DISC, that's been around for a while. So, what's the incentive there? What has it look like?
Yeah, the incentive, and it's been around since 1971. A lot of your clients take advantage of it, just like a lot of our clients use your services as well. But the 1971 was when the DISC was first first enacted. It's been around since, and the value of what it's worth to a taxpayer as an incentive, and the incentive, to the root of your question, is it's an incentive to have products used outside the U.S., to export products, and also to at least partially produce those products in the United States. So it's really a production and export incentive, but a lot of the activities or products that will qualify would be maybe the last thing you'd ever think of as an export. Just an example, sales to the U.S. military. Generally sales like that are prohibited from receiving certain incentives because they're subject to, say, Buy America provisions. So one might say, well, I'm required to make this in the U.S. So how is the U.S. government going to give me a tax benefit or incentive as a reward for making this in the U.S.? Doesn't it have to be made in the U.S.? And That's what one might think at first blush, but many of the contracts for the U.S. military are actually open to international competitive bidding from our friendly NATO country partners. So because of that, they are removed from what otherwise would be Buy America. So yes, even sales to the U.S. military for only products used by the U.S. military but used abroad can qualify for this benefit explicitly. So
interesting.
That's just
but
one
Amit, is there a certain percentage? Is there a certain percentage that has to be manufactured in the States? It's like that.
Right. So the savings at a bare minimum, whatever income, whatever bottom line income qualifies for this will be taxed at a lower rate. At least half of it will be taxed at a rate that is going to be significantly lower. So for most owners of the private companies that we help serve, they're probably at a tax rate that's somewhere between 30 and 41%. The IC-DISC will take them on that income, will allow them to be taxed on that income at a maximum rate of 23.8%. So it can be as large as almost 17% difference. And that's bare minimum that you'll have that reduction in tax on at least half of the income from qualified activity, but it can be much, much more. So, yeah.
And what kind of companies can qualify for it? I mean, are there size restrictions? You said you talked about private companies.
Yeah, private companies. Right, private companies, really any size of company, but they've got to be the owners have got to be subject to U.S. tax. And they've got to have, typically, it's sometimes tough to quantify because companies, of course, have different levels of profit. And the best way to hone in on this is if you're making if you have X amount of qualified income, you qualify. But generally, a company's got to be doing a couple million of qualified sales revenue in order to qualify. Now, it can be less if they're more profitable, or it might need to be more if they're less profitable, so on and so forth. But that's usually the threshold. And a lot of companies will sort of dismiss that because they'll say, well, we just don't have that much in exports. But of course, what they're thinking of as exports might not be things that are qualified for the IC-DISC. For instance, if I'm making cheese in Wisconsin and I sell that cheese to Kraft, in my mind, I think that's a domestic sale. And I might be delivering it to a domestic location. But using a freight forwarder, so I'm thinking there's no way that this would possibly qualify. But if Kraft then were to have me ship that to Canada or have a freight forwarder ship it to Canada, even though the sale is to a domestic company, it still qualifies for the IC-DISC. There's no requirement that the customer be foreign. There's not even a requirement that you directly export the goods yourself. So sales through distributors and sales by distributors, as a matter of fact, if they take title to the property and then they export it, as long as they're unrelated parties, both parties are eligible for the benefit. So if I make something in Ohio and I'd send it to a distributor in New York, that distributor, all they do is package it and export it, we're actually both eligible for the benefit in that scenario. So.
Whoa, this is a very generous tax incentive. So how come not everybody knows about this? Or do they all know about it? I mean, right. Is this ignored? What's happening here?
Yeah, varying degrees of knowledge on it. A lot of accounting firms, and we work with a few of the top 10 largest accounting firms in the country, as well as small as sole proprietors. But it's just one of those things. It's such a specialized area, and it used to be, good for public companies as well. As I've mentioned numerous times, it's only private companies that are eligible for it now, and that's due to the fact that our trade partners, the EU through the WTO and whatnot, have not liked this IC-DISC program, have not liked equivalent programs. They've never objected to the IC-DISC per se, but equivalent programs that were used, the FISC and ETI exclusion might sound familiar to some of our listeners as things they might remember using in the past, but our trade partners didn't like those programs, and they complained about it enough that Congress did get rid of it for public companies, but still available for private companies. So a lot of that knowledge was really centered with public companies, and that's why, long answer to your question is that's why a lot of companies don't know about it. It's one of those things that was sort of lobbied for by the big companies and largely taken advantage of them, and the knowledge really never made it to the smaller companies, and a lot of times to their advisors. But it's picking up knowledge, thankfully. So, yeah.
Good. It's interesting. It's a little bit of a parallel, but what we find very often for some of our U.S. clients, even if they're experienced in international sales and so on, they've been exporting for a couple of years, they'll still relying on their U.S. website and U.S.-centric social media to get out there in the world. And the internet's just too competitive a place these days, and right. Especially if you're looking at very large markets. Let's say you're looking at the German market. Well, there's so many German competitors of whatever it is you're doing that a German prospective buyer is just going to look at Germany. He's not.
They're customers. Yeah, I'm sorry. Yeah, they're customers of ours that, when we've asked them about their websites, they said, well, most of our customers, they all speak English. Okay, maybe as a second or third language. They say and our website is in English, and that's good enough for them. That's sort of equivalent to, a lot of folks will get connected with. Will say, oh yeah, we've already had the IC-DISC in place for many years, but they're not realizing that there's much more available from a benefit standpoint. Just as so many, including some of our clients, after working with you guys, have realized, well, people really, they'd rather order in their own language on a website. They're more apt to place orders if they can place it in Spanish, than in English. I mean, they're just more comfortable in their first language, despite having semi-fluency in English or German or whatever the case might be. So very similarly, analogously, I would say, Susanna, that when we hear, oh yeah, we've already got an IC-DISC, that's actually great news for us in terms of, we think we can help that company some more, because they may not be realizing the full amount of benefits that they can claim. So
yeah, and just like you, for us, when we're looking at online marketing or anything or websites, the language is one thing, but it takes a lot to build the trust you need for the buyer's journey. That's for the buyer to actually engage. Language is one thing, but if the website is not, or the online marketing is not really tailored to that buyer's journey, then it's going to fall flat in that sense. But getting back in the sense to some of the issues we're particularly looking at is e-commerce, because e-commerce has just continued to grow and is now seen in most markets as, a de rigueur. I expect to be able to buy whatever it is I want online, not just B2C. B2B is in fact 3 times the size of B2C. Right. And in a lot of markets, especially as like Gen Zs and millennials start moving up the food chain, and they're starting to say, right, I want to look at a website, and I want to, buy what I want, when I want, how I want, and I want to discover and engage with the with that client, with that other company, through my WhatsApp or through whatever channel, or LinkedIn or whatever channel it is. So very, very varied on that sense. Yeah. When you're looking at some of those relations, sorry. No,
I was just going to ask you real quick. Could you talk a little bit about companies that are happy with their English language SEO, that they've done for their English language website, and if all they have is English. We talk a foreign language website is one thing, but what about the digital marketing and the SEO in general in the foreign language, and how maybe some examples of how that's helped some of your clients? Because I know some of our exporters that are tuned in are curious about this.
Yeah, absolutely. I mean, in an ideal world, if resources were plentiful and we all had the resources and wallets of, Nike or Apple, we would have separate individual online social media for every single market. but not everybody's got those kind of wallets of an Apple. So we always advise, really to focus in on the core key markets that you want to do. And then, it depends on the market. It's you don't want to sort of spread yourself too thin. You really want to focus in and then figure out what platform your prospective buyers are using. Just because they're on Facebook in one market doesn't mean they're on Facebook in another market. And for example, in the States, we're finding a lot of companies moving away from Facebook, but in India, they're still on Facebook. They very much engage in Facebook. In Mexico, you need a WhatsApp account just to be able to communicate with people and to get sort of actions from people. So it's really very market specific, and each market and each buyer persona has a different journey that you have to map, and that's I think the real key to it. From that point of view. Absolutely. Okay. Yeah. From your side, Amit, I wanted to ask as well. One thing we have for online activities, it's almost always the head of sales, the head of international sales, the managing director, CEO who get involved. We get very much the C-suite getting involved. These are major strategic decisions. On your side, is it very much the finance department, or does it scope out a little bit more?
Yeah, it's usually got to be at the private company ownership level in terms of getting the program started, because while it is completely seamless and usually only takes a couple hours of time a year, believe it or not, to achieve these savings, there does have to be a separate entity. It's a paper company that Congress designed to be, largely just a paper company that helps you, achieve these tax savings. So it's usually those folks have got to get involved. But many times we find that we're led to those folks by folks that are, in the sales or operations, because they have more knowledge about where aside from the direct exports, they will have more knowledge about, where the product is actually ending up. Is there a possibility it comes back to the United States? Does that disqualify things if it's packaged? So a lot of times it's operations people that will have those questions for us, and they'll ask us things like, okay, so for these indirect exports, before we talk to the family that owns our company about this, how do we document that that we have these indirect exports? And we'll walk them through the specific rules that will tell them that, hey, you can have as little as the nature of the property can be evidence that it's used outside the U.S. Delivery to a freight forwarder for delivery outside the U.S. But you can go even further and seamlessly, because depending who you're working with, like we've got a great partner here in Cleveland where I'm based, MTA Lines, and they have a platform that you can track your shipment. After you can get access to the ocean bills of lading and export compliance documents and whatnot, and proof of delivery. So you've got complete proof that your consumable item has left the United States. So it's not that there's additional work here. In many cases, if you're working with the right folks, you've got above and beyond what the IRS tells you that could be evidence. So many times it's sales folks that will say, "Geez, boy, I never thought of that." So you mean that our drilling equipment that's used in the Gulf of Mexico, just 50 miles off of the U.S. coastline, can qualify for an export incentive, even though we're selling to a U.S. company? And that's absolutely the case.
That's amazing. So it's not too onerous, because when you're talking about a Wisconsin cheese company selling to Kraft, you then have to prove that Kraft sells it up, and that sounds onerous,
right?
But you're saying,
right.
It's easy.
Yeah, and it's usually not. And oftentimes they'll ask them to arrange shipment to Canada, for instance, and the courts have held that all that's really required, as far as from an ultimate use standpoint, if you're selling to a distributor or a consumer seller like Kraft, just even a statement from them stating that, hey, last year you sold us 10,000 pounds of cheese, and 3,300 of them were, went to Canada. We have a great company that does some chocolates for Costco, and before their CPA introduced them to us, they weren't, they were shipping everything to a location in I believe it was Detroit, so it was a domestic sale for them, all going to the same Costco warehouse. But Costco having warehouses in Canada, the relationship being good with Costco, all they needed was to get sort of a note from them stating that this was a percentage that that went to our Canadian warehouses. So it's a
amazing,
much easier. Yeah.
Right.
Not that that's always the case. Yeah.
I wanted to ask you as well about does it apply for any manufacturer? What about, I know this might not be the case, but what about like a software provider? What about SaaS industries and things like that?
Right. Great question. So for software, as long as the software is substantially developed in the United States, it would, if it's completely produced in India and there's just very minor review in the US is not going to qualify. But if there's substantial development, review, conception, whatever in the US, then it's used outside the US. The manner in which it gets out there, the IRS's position on it is that software licenses qualify. In fact, in their last IRS IC-DISC audit guide, they made their position clear that software licenses for such software will that revenue will qualify for the IC-DISC. So software is a hugely overlooked one, and there's some other analogous law with some other tax incentives that deal with. It doesn't really matter if you receive the software on a compact disc like in the old days, or a floppy disk in the old days, or whether it's transmitted electronically, downloaded, accessed online, even, as long as you have the rights to have that, and you've been licensed that, then the folks that are that created the software. And the nice thing is they often know what percentage of users are outside the US, just because they know more or less where it's being uploaded. Right. So it doesn't even have to be subscription revenue per se. There's even an argument that the online, the ad space that you're sort of leasing that's accessed outside the United States, that portion would be eligible for the IC-DISC. So,
okay, just a quick one as well. We have quite a few companies who are based in the food processing, food and agribiz sector, and these by their nature often quickly evolve into international sales, whether that's the USMCA or further afield, and they have a lot of regulation. It's a sector that seems to have so much regulation. As a friend of mine was joking, there's more regulation to free range eggs than there is to the AI. But what can they apply for these sort of tax?
Yeah, absolutely. Agricultural products. So it's anything that is manufactured, produced, grown, or extracted in the United States. It'd be tough to partially grow something in the U.S. Maybe it could happen, but on the manufacturing end, it's even partially made in the U.S. But for agriculture, a lot of folks miss this, and they assume that since they're selling through a distributor, that it may not qualify. So there's a few different scenarios that we see often. One is selling through co-ops. So there is a way to claim this benefit if you're selling through co-ops. The co-op would have to organize that, though. Is going to be the general case. The co-op's going to have to sort of set up an IC-DISC and have their members benefit. There are some rules that say that if you sell, say, grain to a distributor, and if that distributor commingles your grain with other folks' grain, and then they tell you, hey, this is the percentage of grain we export in total, that unfortunately is not going to qualify because your product's been sort of commingled with others. But if the stock is segregated, as we're finding is the case, even with a lot of family farm providers, then they could likely benefit. So yeah.
That is very good to know, because as I said, we have we have quite a sort of little. We're industry agnostic, obviously, as a company, but we seem to have a little sort of clutch of agri-food business companies. I know they're always appreciative of any sort of help. Yeah, good, excellent.
Yeah. Another one, and I'm getting a question about transportation property. So transportation property, there are specific rules that constitute what is outside the United States. So maritime property, for instance, vehicles, ships, even shipping containers. So the general rule, Susanna, is that as long as there is an expectation at the time of sale that the transportation property would be used more than 50% outside of the United States, then it would qualify. So, even items that are used on cruise ships, for instance, they might explicitly be consumed, like food products might be used on, cruise ships and generally they're not going to serve that until they're out in international waters, whether your definition is the 12-mile nautical border, or 3-mile international, waters definition. There's going to be a lot of that consumption, but then even the vehicles themselves and accoutrements to the vehicle. So basically the language is the regulations read that they talk about, trains, boats, planes, vessels, and any other property used for transportation purposes. That's what the regulation states. So, things that are used to sort of aid transportation can use that measure of where are they actually being used. So something might, sit in dock for, you might know it's going to be sitting in dock for the next 2 years. But if you've got property that's going to be used on that ship once it goes out in international waters, that's a scenario where it would be considered use outside the United States. So, yeah.
I mean, we're running against the clock, but just really quickly, a lot of our clients also, especially on e-commerce, but not only on e-commerce, use bonded warehouses for tax purposes, for tax efficiency purposes. Right. How would that work? Would they have to, at the point of sale?
Yeah, so it's going to be, this is an annual benefit that's calculated. I'm so glad you brought that up, because that bonded warehouse situation and the associated, that and making sure that that stuff is not affected in any way, shape, or form by the IC-DISC. The bottom line is, if a U.S. company has income on its tax return that's going to flow through to its owners, if the portion of that income that is used, that is for eligible income, which is again property expected to be used outside the United States and having some level of U.S. Production to it, or grown or extracted in the U.S., then that's going to qualify without disturbing that setup at all, or any other things. Yeah.
Terrific.
Yeah.
Terrific.
Also, I should mention there are folks that have set up purely sales entities in Europe, for instance. They might make their product in the U.S., sell it to their sales entity in Germany or in Poland or wherever. As long as that entity is not further manufacturing the product and that income is flowing back to the U.S. tax return, which is a common setup for private companies, that income will qualify. Both legs of the sale, if you will, for that will qualify. So
it's an amazing attribute, though, this incentive. And I can't believe it's been around since 1971, you said. And it's just, we're obviously not at all tax experts, but talking to our clients a lot of the time, I'm sure that they would be very appreciative of learning a bit more about how to really get their tax bill down by using by using their international sales. And even if it's, international writ large, as you said, just right. The military or farmer transporter or for fast forwarder amazing. Yeah. So really, definitely a good thing to use. Absolutely.
Yeah.
Just the last thing.
Sorry. Oh, go ahead. I'm sorry. No, go ahead.
I just wanted to make sure everyone had the contact details if they did want to get in touch with you or with us to talk about either websites or online marketing or your international tax efficiencies, and I believe those are on the LinkedIn. But just reach out if you do have something. But Amit, you had a last question as well.
I just wanted to ask you this flip side of that question is, what level C-suite or sales folks, or what level of folks usually make the decision for IBT Online services that are able to evaluate that, wow, we really can be increasing our exports significantly, like through the service.
It's really interesting. Typically, we first get found by like the international sales manager. So I'm in charge of international sales. I've got distributors, or I've got an e-commerce, or I go direct to my end client, and I need to be able to reach out. I need to be able to be found better by buyers. I need to be able to reach out and engage with them better. And so I know that they're not always looking at, so what tools are best in my toolbox right now? Well, 2023, guess what? You've got to have online tools. The age of the business card is kind of like drifting away. Not that face-to-face doesn't matter anymore, it does, but people expect you to have really strong online marketing and websites these days. Yeah. So typically we're first approached by the international sales manager, but it quickly goes up because your online presence touches your brand. And suddenly, the founders, the CEOs, the chairman are all getting involved because there's something like, whoa, is that going to, this is something becomes very personal. And which is a delight for us. It's really great having that engagement from the top C-suite. Yeah.
And I should, to one of your earlier questions, I did want to put an add in of, you were asking about what level of folks get involved and how they might hear about the program. Is it always just through, tax department or their external accountants? We are seeing a growing amount of folks that through a lot of the programs that you help educate exporters about, a lot of the government agencies that you work with, the district export councils and the trade representatives and whatnot, you can find some literature, maybe not as detailed of the topics as we're talking about, but the Ex-Im Bank has a promotion of the IC-DISC, the district export councils online, often for the different areas have that as well. Again, may not get into the detail of, maybe you're taking X amount of IC-DISC benefit and don't realize you're entitled to more. And again, that's not just from activities that qualify that you didn't realize, but believe it or not, Susanna, there are provisions in this incentive that are so friendly to taxpayers. They say, if you have transactions during the year that don't make as much as the average for whatever your given product is, you're allowed to calculate your IC-DISC benefit as if those lesser profitable transactions were as profitable as the average transactions. But the ones that make more, you don't have to step down. So, right, usually with tax things, there's all kinds of things, ceilings and limits that are hurt.
Oh.
Here, they're actually saying, look, as a reward for exporting and only making 10%, although domestically you made 20%, we're going to let you calculate your benefit as if you made 20% rather than 10%. So anyone who already has an IC-DISC, it really makes sense to look at whether you're taking, a benefit of, you're getting a benefit of $50,000 a year as a reward for exporting and manufacturing in the U.S. when the government essentially is encouraging you to take maybe $80,000 or $100,000, and you just don't realize it, or your CPA may not realize it. So.
Amazing. We're getting a lot of interest in this, and I think that we can safely say we'll be doing another event later, maybe drilling down with some practical examples, either through the district export councils or directly on a webinar, and we'll keep you all posted. We've gone a little bit over our time, but thank you all very, very much for joining in, and we hope we gave you at least some incentive to go and make sure that you're as tax efficient, as tax robust as you can be. Remember, exports are a tremendous thing, so you can really use your exports even for your tax benefits like that. And then if you want to learn more about the online world, about your websites, about your online marketing, how to use those better, make sure that they're working as hard as they can for you. They are your best sales reps after all. Let us know. But I wanted to make big thank you to Amit, but also to all of you for joining in today. And we will be circling back to you at some later date with more information about the IC-DISCs and making sure your exports are really working hard for you with that.
Yeah. Thank you very much. Thank you.
Thank you very much. Thanks, Amit. Thanks, everybody. See you all soon.